S&P is close to another high, same with the NASDAQ. But some of our guests have said, look, the market is overly reliant on the Magnificent Seven. Would you agree with that?
I wouldn't. Color me the contrarian here.
I will.
For good reason, too. The Mag 7 keep expanding earnings way faster than anyone anticipates.
Yeah.
So last quarter, it was 27% earnings growth versus estimates for 14%. This quarter, 25.7%. So as long as these companies can keep growing their earnings, it'll bring the valuations back in line. The stock prices will go up. Stocks always follow earnings. I think this is a misnomer here, right? You got the hot hand. These are your all-star players, the Mag 7. You don't take the ball out of their hand. You keep giving it to them. You keep giving it to Caitlin Clark. You keep giving it to LeBron James. Or you keep giving it to Aaron Judge. You don't say, no, give me that back. Go sit on the bench. So.
Love the sports analogies. All right. A new Bank of America poll says that 45% of investors say that the Mag 7 was the most crowded trade.
Yeah, it is definitely the most crowded trade, but it's the one that's working, right? The earnings are there. It's driving it. You don't want to miss out. I think, though, you have to diversify out of the Mag 7. Not completely, but you got to have positions in other companies. There's still value in this market. If you look at the energy sector, trading at about 15 times earnings. There's even chip companies like Alphabet trading at 19 times forward earnings. So, you have NVIDIA at 40 times. You can get something half price. That's a player in AI. I think that's a pretty good opportunity in a market that's headed towards more all-time highs.
I'm going to flog this poll to death because in that same poll, 91% say that U.S. stocks are overvalued. That's the highest number, by the way, in this survey dating back to 2001. Getting back to your point, are they overpriced?
There are some stocks that are. The S&P 500 is at 22 times forward earnings. But here's the thing. That's a survey of fund managers. And guess what fund managers have been doing this year? They've been underweight equities. They're sour grapes. They've missed out on a lot of this rally. So, of course, it's easy to say it's overvalued. We're rationalizing not being it. Look, I'd rather be overvalued and richer than overvalued and on the sidelines waiting for a pullback.
They're covering their backsides is what you're saying.
Absolutely.
All right.